All right, welcome back to QuickBooks Online. We're going to be diving into payroll setup. Now, since employees is going to be one of those big chunks, especially when it comes to a business, right? If you remember the structure of how a business works is you need customers to sell products and services to, you need vendors to purchase those products and services so you could sell to your customers, and you need employees to help you run your business, right? Especially if you're trying to grow and make your business bigger, you're going to be needing more than, two hands to help you outrun the business. Now, don't forget, key rule here is if you plan to do so, you need to have a separate accountant to be able to do your books. You, the boss themselves, cannot be handling the books, okay? Because in technical terms, if you're an independent contractor, yes, that's okay because your business is your own, right? But if you're trying to run a company, rule of thumb is you need to have a separate accountant to be able to manage the business, right? Because again, that's part of internal controls is you can't be the one that's managing everything, right? You have to distribute the duties. So that is definitely number one thing is you have to have an accountant. Okay, so that's why it's important that when we're going through payroll itself, right, you need an accountant, you need maybe someone who can help you with the sales. Maybe if you're running a store, you might need to hire somebody to do the cashier, okay? And then you might need someone to help you either make or distribute the products. So at the end of the day, payroll and employees is going to be another huge chunk of a business, right? It's what makes a business run. Now, here, Chapter 13 and Chapter 14 is going to be the combination between the setting up the payroll and then actually physically processing the payroll, okay? So this is what we do. We're going to break employee section into two parts. First one is setting up payroll, okay? Now, there are many things that you need to know when you set up payroll, right? Here, they give you like a little tiny miniature steps here to help you get started, but I beg to differ. I think that you guys need to spend a lot of extra time when it comes to getting to set up your payroll, right? Here is a quick little tip for you for the payroll setup. They only have 6 steps, but that's because they are assuming that when you are running payroll on the QuickBooks Online that you're going to be just using the subscription. Now, that is just one option you can go to. Now, when you are looking at in-depth on how to actually process the payroll, you're going to find that it is very labor intensive, right? Because you have to focus on each and every individual employee. Each and individual employee is going to want different tax rates. If you pay them different points, then they're going to be in different tax brackets and so on and so forth, right? And the most important thing about it is that if they turn in a W-4 form to you, you need to determine which one wants to withhold, which one wants to not withhold, how many other extra things that they are going to be doing, and on top of that, the employer is also responsible for providing those, make sure they deduct from individual's paycheck based on what benefits and deductions that the company offers. So there's a lot going on. So in this case, there's another thing where I'm going to say you need to add a step 0, okay? You need to determine, 1, are you going to have employees, right? And if you are, what kind of employees are you going to have? Because you can also determine whether you want someone who's a regular common law worker, they come in 8 to 5, or you can literally have someone come in as a 1099 contract worker, okay? The 1099 workers are not considered your employees, but they still work for you. Okay, so that's the connotation that we have to understand is what kind of workers are you planning to have? Are you planning to have regular common law workers or 1099 contractors, okay? Because if you do so, then let's say I want W2 workers. You need to figure out, one, how much are you going to pay them? How often are you going to pay them? And what benefits and deductions do you offer? Okay, especially for a company, right? A lot of employees are looking for employing high caliber working employees, but it's also very difficult because, once again, if you don't provide any benefits, someone's just going to temporarily work for you just to get the experience, and then they're just going to leave. So that's one thing that you have to also understand. But here's the catch. Having to provide, not only paying them for the job and having to pay into their benefits and offer deductions off of their paychecks, that hurts you as a business, because then that makes employees a very costly thing. That's why most often you do see that there are a lot of companies who just rather have 1099 contract workers, because they don't have to deal with any of those extra responsibilities for having employees. But I'm telling you right now, there is no 1099 worker that's willing to work for your company for long hours and be only paid for just what they work for, right? You also have to be very careful into considering that, okay? So that's going to be definitely number 10 right there, is determining whether or not you're going to have employees, how are you going to pay them, when are you going to pay them, how often you're going to pay them, and so on, and what benefits and deductions you offer for them, right? Now, in this case, we're going to make it really sweet and simple, okay? We're going to use the most minimal amount of deduction. So here in the state of Nevada, you only are subjected to federal taxes only. There are no state taxes whatsoever. So that means the employees do not get taxed twice, okay? Or in this case, taxed twice, meaning they only pay for the federal taxes. There's no state taxes in terms of employment, okay? Not in terms of sales tax, right? Of course, there's state sales tax. We're talking about payroll state taxes, okay? In the state of Nevada, you're not obligated to have that. However, since this company is founded or established in California, yes, California does require a state tax for disability, and they actually pay into their unemployment. So believe it or not, every state has their own different employment needs. So in this case, that's the difference here, okay? So you need to make sure, whatever state that you are doing your business in, you need to make sure that you are aware of every single taxes, dollar per dollar, whatever it is, that you are understanding what your responsibility is as a company to provide for your employees, okay? Now, this one is going to be looking into actually setting up an actual payroll subscription, okay? But in this case, that's what I was going to actually mention, is that because the easy and feasibility of using QuickBooks Online is to, once again, try to make things much easier for you, okay? Now, as a user, right, if you're not kind of aware of what those subscriptions are, here are what the 3 subscriptions are when you are using the QuickBooks Online, right? You have the core, which does the very basics of getting the calculations, all the federal taxes, all the state taxes if necessary, and that's about it, okay? And they also do 1099 filing for you as well, but that's about it, right? And they help you to pay for taxes. But as you go through the subscription, right, core is only for a minimum of a small group of employees. If you are a large group, a large company, right, and you need the subscription to be able to process at least 50 employees and or more, you need to go up in the subscription. Because again, once you do that, then you'll have, for example, the premium subscription will have the same stuff as core, but it includes things like direct deposit, and it includes things like having QuickBooks Time, which is a feature. And they also allow you to also help you have an expert to help you help you prepare for your taxes. Okay. And then of course the Elite has everything other, plus they have other extra things in here too. Okay. So again, the subscriptions are based on what your company needs and how big your company is. Okay. Now, as I've mentioned before, every subscription means it's a monthly subscription. You have to pay it on a monthly basis. For payroll subscription, there is no 1-year contract. Okay? There is no 1-year voucher you could buy. In this case, it's a constant subscription where you have to buy it every single month. Okay, so if you want for more details, you can click this link here and it will take you to the actual website for you to help you get started on a subscription. Now, for this class, you do get a free 30-day trial, okay? However, if you are done with this class and you do use your 30-day trial, unfortunately, you are unable to restart that 30-day trial again because it's a one-time free subscription. Okay, so that's why in this class, right, if you really want to follow through with the book, then you are more than welcome to do so. But for this class, I am not going to be using a subscription just because, again, I need to keep teaching this over and over and over. I cannot do a 30-day subscription, but also to let you know, what if you don't use QuickBooks? Because the thing about payroll is because it's so labor intensive, you are not obligated to use payroll's pre-made subscription for you, right? You can outsource. It might be cheaper. Okay, you can outsource your payroll to somebody else. Maybe there's a small local company that does payroll for you. You could definitely go through that. Or if you choose to do manual payroll, then this is what you need to do. This lesson here is going to teach you how to do manual payroll, and if you outsource your payroll, not using the subscription. If you want to use the subscription, you guys can read the book. Okay? All right, so in this case, I do need to show you what the subscriptions are, what the availabilities are, and so on and so forth. But once again, for this case study, I am not going to use a subscription because if so, you guys would be done in 10 minutes. All right, but in this case, I want to show you what happens when you do a manual payroll or you choose to outsource your payroll and you still need to update your QuickBooks somehow, okay? Because in this case, you won't be able to do anything without subscribing to a payroll service. So that's why we have to kind of work around that. And how do we do that is what I'm going to show you here today, okay? So first thing we got to do is we got to set up our payroll, right? We got to determine, once again, here's the 6 steps of how to do this. So again, we got to do, number 1 is, well, first we got to do step 0, right? Are we having employees? Are we going to be, how are we going to pay them? And so on and so forth, right? Once you have established that and you understand, you establish what you offer, what benefits and deductions you offer to your employee, right? That could be, right? A deduction would be, medical, right? Or Social Security. I'm sorry, no, Social Security is federal. But if you do like things like a 401k, that is a deduction because it takes away from your paycheck. Other benefits would be if, let's say, for example, the company pays for the insurance, and that would be a benefit to you. But other than that, you need to determine what you offer to your employees. So again, for most common employees, so for example, MGM, right? They also put into your paycheck a little section, a little extra money to pay for meals. So that's a benefit, right? That when you work there, you get your meals paid. So that is a benefit. So you want to make sure that you do outline what you offer to your employees and so on and so forth, right? So again, once you establish that, then you need to go do the second part. If you plan to have W-2 employees, you need to collect W-4 forms from them. If you are having your 1099 workers, you need to have them submit to you a 1099 form. You need their social security card, any form of if you want some form of naturalization, or if you are looking at employing green card holders, right? I believe they have a temporary social security card number that you would have, so a green card, or if they are a visa, right? If there's someone visiting and they just need a temporary work, I believe each visa person gets a little temporary work identification number. So again, anything that you need proof to make sure to ensure that you are correctly paying to their each and individual's correct account. So in this case, you would need to their social security, birth certificate, driver's license, whatever, okay, state ID, whatever, proof that this person is this person, okay. Now once you've done that, then that's where step 2 says you need to subscribe to an Intuit subscription. So we're going to ignore step 2, and we can go ahead and actually we're not going to be able to use the step wizard because that comes with making that subscription, okay, to set up the company policies and documentations, okay. So let's go ahead and do that. So because we're going to be doing our payroll as a manual payroll, or as if you have outsourced your information. So if you were to just go ahead and just click on it, right? If I were to go ahead and click payroll, right, what you're going to notice is this window is going to immediately ask you to subscribe to a actual subscription. Now, you have to go through this in order to go through the payroll wizard, okay? Unfortunately, we are, again, if you want to subscribe to it, it is a 30-day free trial to you for the core. I believe it's the core. You're more than welcome to do so, but unfortunately, like I said, you only have 30 days to be able to mess around and play around with the program for this time being, right? And if you choose to not do that, then, or choose to do the subscription and then forget about your 30-day trial, then unfortunately you would have to go back and do the manual payroll, okay? So that's just one of the things that I am not going to be showing you today, so that is okay. But this is what you do when you click on that payroll. It's going to show you this, okay? Now, if you remember back in chapter 2, I did mention about QuickBooks Time. QuickBooks Time allows you to give you an actual live action clock in, clock out system, okay? But it is a subscription that you pay, okay? So make sure you are aware of that. So here, now that I got into the Employee Center, this is what it looks like, okay? Now, we will start adding our employees one at a time. We already added our first one, which is Ernest Withers. If you remember in chapter 9, when we entered time for a project, that was the first thing that we did, was enter in Ernest Withers, which was the owner, right? So that's my very first employee that I have already on here that I made previously. But we will have the opportunity to add in an employee. And how do you do so? Because you do go through that through the payroll step wizard. But in this case, like I mentioned, we're not going to do that, okay? So first thing is right here, through the payroll step wizard, what are the things that you need to do? So again, you need to determine the different accounts that you will be needing to be able to add everything to be ready for payroll, right? First thing's going to be is how are you going to pay your employees, right? What are your options? So again, you can have a salaries and wages. So if they're, officers, they can have salaries. If they are a temporary person that's just working there, 8 to 5, they can be worked on an hourly basis, right? It just depends on how you are going to keep track of your employees and how you pay them. Are you going to pay them as a straight rate, or are you going to pay them as a overall amount? Okay. And other things too, if you want to, you can also pay them as a again, a 401k. And if they are tipped, right, you can include that as part of their pay, or if they are earned commissions. Okay, so any other benefits and deductions. So again, if you provide health care, medical, whether it's vision, dental, or life insurance, right? Those are going to be other things that employees can earn. Okay, so whatever it is, make sure you identify what they are. Okay, then you're going to have to determine the pay frequency. Are you going to do weekly? Weekly is every week, right? Bi-weekly is every 2 weeks. So a very common practice that a lot of companies do right now is they are on a bi-weekly schedule, or they could do a semi-monthly. What's the difference between bi-weekly and semi-monthly? Bi-weekly, literally, it's 2 paychecks for every year. Now, we understand that there are 52 weeks in a year, so you're going to be subjected to 26 paychecks for one whole year. Where other situations, such as semi-monthly, you literally only get paid twice a month. So that means usually the breakdown is every first 15 days of the month you get paid, and at the end then you get paid for the remainder 15 to 16 days of the month. Okay, so that's how you is broken down, and that's a common one for salary-based earners, right? Typically salaries are usually paid on the 16th, and they're paid on the 1st of every month, because they work for the 1st through the 15th, they get paid on the 16th, and then from the 16th all the way to the 31st, they get paid the following day. Okay, so that's typically what you normally see in a real business world. But I've seen other ones, such as if you are working for Uber, you can get paid daily. Yes, you can. So again, depending on what your company offers or how you're going to pay your frequency is very important, because this is ultimately going to help you keep track of how much money you're going to pay for your employees. And also, this is also going to be important for using your tax tables. Okay. So then taxes, again, what employee taxes are going to be subjected. So again, if you are going to be having your W-2 workers, they are subjected to federal income tax withholdings, right? So that means they pay for their own federal income tax, and they pay into their own Social Security and Medicare. That is federal and obligated. Now, if they have state taxes, if applicable, you need to also subtract whatever state taxes that is required, okay? And of course, what are the employer's taxes? So here is something that you need to know. Just because you're going to take away money from the employee's paycheck, you are also subjected to match, or also pay into having that employee as an employee, right? So in this case, you are required to match Social Security and Medicare. So we call that the FICA, which is Federal Insurance Contribution Act. So if the employee is going to put in 6.2% and 1.45% to Social Security and Medicare, which is the FICA, you are obligated to match them 100%. Okay? So in this case, not only is the employee responsible for themselves, you as an employer are also responsible to also protect your employee as well. You are also responsible to pay into federal unemployment tax, which can be a range of different percentages, okay? So in this case, it's going to be that 940 form. You got that 941 for the Social Security and Medicare. And other things is going to be if there is a state unemployment tax. So in this case, state unemployment is going to be also dependent on your state. So again, make sure you do know and are aware. And of course, requirement, depending on what state you are in, you may be required to have workers' compensation. So in this case, in the state of Nevada, yes, you have to pay to federal unemployment because that's a law. You have state unemployment, yes you do, for Nevada. And yes, you are required to have to pay into workers' compensation. Yes. Okay. So now that we went over what those details are and what those accounts need to be set up, right? What you offer to your employees and what your responsibilities are for having employees. Therefore, now we need to set up our accounts, okay? You need to set up your accounts ahead of time. Now, if you're going to use your payroll setup wizard, you're still filling out the same information. The only difference is it's generating the account for you behind the scenes, okay? But this is what we need to understand here is that you're going to be needing to have all of these payroll accounts in your chart of accounts before you can process payroll. So this is going to be step one no matter what, okay? So in this case, what you're going to notice here is I do have certain little extra accounts because in this case, right, after you set up your payroll accounts, you need to set up what's called payroll items, which will give you those options for those extra deductions, extra benefits, earnings, and compensations, and so on and so forth. But in this case, because we don't have payroll turned on and we don't have the payroll subscription, therefore we would have to manually create all of our accounts, which will include every single payroll item that we have. So in this case, yes, there are 2 pages full of accounts that we need to add in here, right? Let's go ahead and work through it one at a time. Starting with the first one here is going to be we're going to take a look at liabilities, okay? Now, as a employer, right, you are subjected to withhold the money from the employee's paycheck, okay? As in, when an employee gets paid, they are telling you that that you need to take a portion out of their paycheck and pay to the government for them. So that is why it's called a withholding, because what the company does is they are responsible to pay into the employee's portion of the federal taxes. Okay, the employee does not do it themselves. It is a company employer responsibility. Okay, so that means not only if you're working for a company, that means that company has to be responsible for putting in the money for you. Okay. And of course, for 1099 workers, right? 1099 workers are responsible to pay for the federal taxes themselves. That's why you are not responsible to pay those 1099 workers for any of their benefits or any federal taxes whatsoever, right? You just pay them for what they worked, and that's it. Okay? The 1099 workers are going to be responsible to pay into their own Social Security at the end of their personal tax year. Okay? All right? Just to make sure you are aware, there's a difference between a W-2 and a 1099. Okay? W-2, you're responsible to pay into their federal taxes, state taxes, and then you also, as a company, are also responsible to pay for the employee. On top of that, your portion for having the employee work for you. Okay? So in this case, we're going to be setting up a bunch of different liabilities because once again, since you are not paying the federal government right away, therefore you're creating a liability, meaning you owe the government. Just like when you collect sales tax, right? Are you going to write a check for 2 cents for sales tax to the government? No, you're going to wait till the end of the month, collect all the money for the sales, and then pay for it at the end of the month, right? So we've already took a look at an example of that, right? In chapter 5, okay? So in this case, right, that is what we're doing. We are going to be collecting the lump sum money until we reach the point. Now, again, we'll talk about the filing for the 940 and the 941 more so in chapter 14, but there is a frequency that you have to pay. Now, depending on what kind of business you are, whether you're a small business or a corporation, a small business can get away with paying those payments, quarterly, monthly, or even at the end of the year. But for a corporation who's constantly collecting billions and billions of dollars for all those million of employees that they have, they are required to make a payment every other week, right? So every other week, so the week that they're not doing payroll, then they are going to be subjected to pay, because once again, that right there is a corporate responsibility, and it's the best way that the federal government can get money instantly. Okay? And then, of course, more so less, you have to know what kind of frequency you're going to pay. Now, a common one for any type of business usually starts off with monthly. So in this case, right, you're going to be collecting that money from the employee and from yourself, the company itself, and hold it in as a liability. So first one we're going to do here is taxes to be paid. So payroll, wages, and taxes, right? We're going to be taxes to pay, wages to pay. We got employee Social Security, employee Medicare. We got company Social Security, company Medicare. We have federal income tax withholdings, federal unemployment, state unemployment, 401k deduction, right? So that comes off the employee's paycheck. And then, of course, 401k match is what your company matches, okay? And workers' compensation, and then employee health insurance, and then, of course, company health insurance, okay? Oftentimes, that's what you have to figure out, right? If you're going to be giving 401k plans, or how much are you going to match them up to? Usually, an employee will put in a certain amount, and then the company can either offer one or two of the options, right? Either they can match 50%, or they could match dollar per dollar, whatever it is. You have to figure it out, and you have to be able to calculate that, right? And of course, for healthcare, right, there are three options that you can do, right? One is have the employee completely cover at 100%. Two is where you and the employee split the insurance in half. So you cover 50%, they cover the other 50%, and the other option is you cover them 100%. Okay? So once again, this is something that your company needs to determine. How are you going to treat your employees, and what benefits and deductions do you offer? So in this case, let's go ahead and enter in all of these liabilities into my QuickBooks. So once again, this is going to be where you need to go to your chart of accounts. Now, before doing anything, I do recommend you to look at your accounts ahead of time, because sometimes you'll have it, sometimes you won't. Okay? So in this case, let's just type in payroll and see what pops up. Okay? Payroll. We got other current liabilities. We already got payroll tax payable. We got payroll tax payable, and we got payroll expense. Okay, and we got payroll expense here. So let's see. So we got payroll, wages, and taxes to be paid. All right, so the first one we have is payroll taxes to be paid, and then we have payroll expense. So here is payroll expense. So we do have the main accounts here, but now since we have the main accounts, now we need to break it down with our sub accounts, right? So in this case, whatever fits under which category, then you're going to go ahead and put it in there. So all your liabilities, which is the first thing that we're doing here, is going to all go under payroll, wages, and taxes to be paid, okay? So here, that's what we need. So here we got payroll taxes to pay. So that means anything, so pretty much everything that you need so all of those taxes that we mentioned earlier, okay? Now, is a 401k and a Medicare a tax to pay. That's up to you. If you want to have it as just employee benefits or employee deductions or whatever you want to call it, yes, you can create a account for that if you would like. Okay, it's you're not obligated, but at the end of the day, it's up to what you want to do. Okay. So in this case, we already have the payroll, wages, and taxes to be paid as the sub account, and the name is going to be wages to pay. So again, let's go ahead and create our very first account here, and one by one, plug them all in. So again, we're looking at liabilities. Okay, it's going to be under payroll taxes. So payroll tax will be an other current liability under payroll. So you got federal, in this case, we're not doing that one. We're doing wages to pay. Payroll tax payable. Okay, that's right. Payroll tax payable. And then again, we're going to go ahead and put in wages to pay. These are other current liabilities. Yes, other current liabilities. Hold on, I can't find the account and under other current liabilities, customer. Oh, right here, payroll wages right here. So you want to make sure you click on the right one. So in this case, right there. Okay, so payroll wages to pay. You got wages to pay. Okay, and again, it's up to you. You can fill the description as you'd like. I'm just gonna go ahead and click the next one. Another account is already. We have wages to pay already. Let's see. Let me see if we have wages to pay. Okay, so we already have wages to pay. Okay. So we already have it already in here. So in this case, you're just basically, I'm going to look up all the liabilities, and that way I can determine which ones I need to add and which ones I don't need to add. Payroll. Okay. So some of these are going to be either automatically created for you. Okay. Let's see. Liabilities. So here, under payroll, wages, and taxes to be paid, you have payroll taxes to pay. You have retirement benefits. So again, you could convert this to 401k. All right. You got wages to pay. Oh, there's only 3, so you only have 3. Yes.
Yeah, just to let you know, I entered most of them in. That's on there, and I found that I was able to do all of them. So that's cool.
Okay, so yeah, so here we got to do employee Social Security, employee Medicare, company Social Security, and company Medicare. So that's definitely something we need to add in there. So let's go ahead and add that in there. Okay, so once again, liability. We need to go to other current liabilities under payroll. Okay, so first one I'm going to put here is going to be employee Social Security. Okay. Now in this case, yes, they're all going to go to the same form, but you know, you want to definitely put this in there just so then you're able to, you know, separate your accounts accordingly. Okay, so there is my first one, which was my Social Security, payroll wages. Okay, and I'm going to do employee Medicare. Okay. Okay, next one I'm going to do is also going to be payroll wages and taxes. So we see, as you can see, my list is growing here. I'm going to do company, Social Security. Okay, and then I'm going to do another one. Okay. So what you're going to notice is that it does tend to get quicker as you add your accounts in here. Company Medicare. Okay. So let's see what other ones I need to put in here. So we got wages to pay, we got Social Security, Medicare, Social Security, Medicare. Next is federal income tax withholdings, federal unemployment, and then state unemployment. Okay. Let's see, I think federal income is already in here, but let's go check it out. Payroll taxes. So we got, oh, nope, just wages to pay is all we have here. So in this case, I need to put in federal income tax withholdings. Okay. Then we need to put in okay. So if you want to, I believe you have payroll taxes to pay. So if you want to put that under that particular sub account, you can. In this case, I'm just gonna add them all under that one whole entire list here. Okay. So payroll, so federal unemployment. Okay, federal unemployment, tax, if you want to put tax there, it's pretty straightforward. Federal unemployment, tax, okay. State unemployment, tax. Okay, let's see what else. We know we have to put in 401k deduction, 401k match, workers' compensation, employee health insurance, and then company health insurance. Okay, so, okay, all right. So this one could be under employee benefits, whichever one that you have it under. You again, you can make a separation so you can kind of see where everything is. Okay. There you go. So other current liability, let's see. So right here you have retirement benefits to pay. So you could click on that and call this 401k deduction. So once again, that is what the employee is going to be paying for. Okay. And then I can also include the company match as well. For a 1K match. Okay, I would, let me see, that's not a retirement benefit plan, but we can go ahead and just put in for the workers' compensation, that could just be in the regular one. This was going to be other payroll taxes. Here you go. Will be workers' compensation. Now, workers' compensation will also be determined based on the job intensity, right? The labor intensity, right? For instance, a construction worker will definitely have a higher rate of workers' compensation because it's a higher risk type of job. But if you're going to be opening up a small local coffee shop, the most injury that you'll get is maybe third-degree burn injury from, handling the hot coffee or making the hot coffee itself, right? So in this case, the it's based on a percentage of how much money you're going to be putting into somebody's health care, for health issues, right? So what workers' compensation does is it basically protects the business in case the employee decides to sue for negligence or for, improper care, for, or, unattended medical treatment, things like that, right? So again, as a company, this is their way to protect themselves when an employee gets injured on the job. By, for instance, if someone decides to burn their hand for making coffee, that means the company needs to be responsible, because when the employee is on the property, you are held responsible for whatever injuries that a person or the employee is going, if they do get injured on the job, right? So that means if they get burned, you have to at least pay for their medical attention, like if they get medical bills for that, okay? Because that is a company responsibility. Now, if you choose to fail to meet that thing right there, an employee has the ability to sue for negligence and sue for other things. So this workers' compensation is not only a protection for you, it is definitely to for surely reduce the abilities of having a heavy lawsuit against you. Now again, also that also goes into tying into for workers' compensation, right? You can also have it in case that person does get injured on the job and they no longer can work. That can also include things like paying to get retrained, right? Things like that. So workers' compensation is a big one. Okay, so that's why it is required by the state to have, right, for the protection of yourself, but also for the protection of the employees that you employ. So in this case, I already put workers' compensation. So now next is employee health insurance. Okay. And then last but not least, my last liability is going to be the company's health insurance. So if you choose to do 50-50, right? All right. So therefore, those are all my payroll liabilities. That's only the liabilities that you are racking up and eventually will pay to other people. So again, maybe that 401k, whoever you pay for the retirement benefit plan, is going to be the person that you're going to pay, right? So for instance, maybe you're paying to Merrill Lynch, right? Other things like, for example, the health insurance, maybe you're paying to Blue Anthem, or you're making a payment to Blue Shield, right? You need to make sure you collect that money first and then go ahead and pay those companies for all of those. So again, that's why they're liabilities. Okay? Now that's just the liabilities accounts that we just put in there. Now we actually have to account for all the expense items, because when we look at employees, they are an expense to the company, right? They are going to be the largest expense of a company because they are a consistent one that you have to pay on a bi-weekly or twice a month every single time, because again, labor, it requires that these employees get paid in a timely manner. So therefore, because they are going to be continuing to work, you need to be able to put in these expenses to them. So that, for instance, you got payroll expenses, you're going to be needing salaries and wages payable. So this is mostly going to be things like that an employee can collect. For instance, they can collect commissions, they can collect tips, they can collect bonuses, they can even, if you offer vacation and sick pay, go ahead and put it in there. If you offer overtime, right? So again, if an employee needs to work more hours, you can give them overtime, and that will be just do you pay them 1.5 times? Do you pay them twice as much? Whatever it is, and then you need your payroll tax expenses. Okay? So we're gonna do salary, wages, commissions, tips, and bonuses. So let's go ahead and pop that in there. So we already saw that there is an expense account for that. So we're gonna go to expenses. Now I believe this is gonna be considered an other expense, if I'm not mistaken. Let's see. Other expenses. So you got merchant fees. Here you go, payroll expenses. You got officers' salaries. You already have salaries and wages expense on here, so you don't need to do that one. So we're going to go to the next one, which is going to be commissions expense. Okay? So, or in this case, I'm just going to put commissions. We understand what that is. Commissions. Okay? We also are going to allow our employees to collect tips. Okay? But we're not going to put them towards the, or whatever it is that you decide, okay? Other expenses. Utilities. Payroll, here you go, okay? So you got tips. If you allow tips to be part of the earnings, then there you go. I'm just going to type it in. Maybe it'll be quicker. Yep, payroll expenses. We said we offer bonuses. Right? Maybe you treat your employees to Christmas bonuses. Okay? Let me see. I'm going to type in again. Payroll. Okay, what other ones are we needing to put in here? Vacation/sick pay, overtime, and payroll taxes. Okay, so vacation. If you include vacation/sick pay as one, you can put them as one. So if you offer that to your salary-based earners, overtime. Okay, and last but not least, the payroll taxes. Let me see. I think there is one already. Let me see. We got tips, bonus, commissions, officer salaries and pages, overtime, salary and wages, tips, vacation, and taxes to be paid, payroll taxes. Awesome. Payroll taxes is already there. Okay? So there you go. Now we are finally ready to go ahead and process our payroll because now we have all the accounts that we need to process. So again, payroll items are basically going to be when you are subscribing to the Intuit subscription, you're going to be listing out all of these things. But since we already took care of those payroll items, you don't need to put these in here, okay? But usually the payroll items are going to be your pay rate frequency, your amount that your federal taxes, your state taxes, your benefits, your deductions, and your compensations. Okay? Now, here is something you do need to know when you are considering plugging all those things in, right? So now that we already done that, what you normally would is after you've already went through your wizard and everything, you're going to notice that when you go to your gear icon, the payroll center will be somewhere here, okay? I believe it's going to be like the 5th one down here. But because we didn't have the payroll subscription, unfortunately, we don't have that appear here because we're not paying for that extra feature. So in this case, for references only, if you need to have access to the payroll, you would normally have it here, or you can actually click on payroll here on your left navigation tab and be able to access here. Now, notice this. You also have the ability to manage your 1099 workers, okay, under payroll, okay, which once again is weird. You can even manage your workers' compensation here as well, okay? So this is where you're going to be connecting to an actual agency for workers' compensation. So there's a lot of them in Nevada, right? I believe Genesis is one of them, okay? And so on and so forth. So you're able to actually pay your 1099 workers through the payroll center as well, which is very weird. Okay, but that's how you can do it. Okay. So as you can see here, when I clicked on this, these are all my 1099 workers, right? Dan Kahn is a 1099 worker. If you remember, when we set them up, we made Gandhi a 1099 worker. So that's why you're able to also manage the payments through here. Okay, so that's the payroll center. But mostly we want to make sure that we're focusing on the employee section because once again, when you go through the payrolls wizard setup, you also actually enter in your very first employee. Okay? So let's go ahead and take that time to put in my very first employee. Okay? So of course you can edit your employee any given time, right? Again, you would just go down to the employee section. Okay? Right now I have one employee, Ernest Weather, and I can edit his profile any given time. So let's see what it says here. Let's see. It says enter Ernest Weathers. We are Withers, so we already have Ernest in here. Okay. Okay, so we're going to actually edit his profile here since we already have him already on there, and we're going to fill in all the information. Okay. All right, so here, address we're going to put here is 42 Comistas Court. Okay, so here let's go ahead and edit his profile. So these are the things that you need to know about your employee to set them up. Now there are a few things that you're missing, especially because when you're going through the setup wizard, you also put in W-2 information in here as well. So in this case, that'll be some sections that you'll be missing, but that's okay. We're putting in an employee in as far as that, right? So again, Ernest Withers, okay, he lives on 42 he lives on 42 Comistas. So here you go. 42 Comistas Court. Okay. And he lives in Walnut Creek, California, 9458. Walnut Creek, California, 94598, United States. Okay. All right, let's see. Next one is we're going to enter in extra information under the notes. So this is where that missing W-4 form information, we're just going to put it in here so we can identify it ourselves. But when you do go through the payroll wizard, you're going to actually identify all of his W-4 form information. So then it processes the information a lot quicker for you. But in this case, we would have to manually put it in and say, this is the owner. All right. And then on the W-4 form, they're filing as married. Okay. Paid monthly, and health insurance 500, and 401k 3% match. Okay? Because he's the owner, there are some restrictions and some regulations that you need to know about providing benefits and deductions here. So in this case, owner, okay, married, filing jointly, monthly. Okay. filing jointly. Okay. Um, paid monthly. Health insurance. $500 and 401k match 3%. Okay. Then let's see what else we need to add. We need to put in here. So next is going to be putting in other information such as social security number is 3211212311345. Hire date will be January of 2020. He's gonna get $75,000 an hour. Okay. So social security number 12312. Was it 1345? Okay. Employee identification number. So again, if he is the business himself, he'll have an employee identification number. Hire date, we said was January. So in this case, you have to click it. January 1st of 2021. Okay. Release date, that's only important in case you have to fire your employee. Okay. Reason why you need to have that is so then if and when that they are released, it's important to know, especially when you're processing your next payroll, if you put in the release date, it will take them off of the payroll list. Right. If you do not, then you're going to end up paying a ghost person, right? But also that is very important to have because at the end of the year anyways, if let's say your employee worked at least the first half of the year, you are obligated to give them their W-4 form or their W-2 form, right? So then now it says right here, how much is he going to get paid, right? He's going to get paid $75,000 a year. So in this case, let me see how much is that divided by. So you're going to get that, let's see, it says right here, $75,000 for 12 months. That means every month is about $6,250. Divide that by 2 because you can get paid monthly. Okay, so you're going to be looking at $78.13. $73.13 per hour, or 78, excuse me. Okay, if that's just being very specific, right, to get you to get a rough estimate. Now, if you want to do an actual flat rate, let's just say he gets paid $78, then you can go ahead and put $78, right? And let's see, date of birth, right? July 4th, 1968. Why is it important to have a birth date? Anybody? Why is it important to have a birth date?
It would be recognized through the Social Security.
Yeah, okay. Why is it so important that because if it's going to get recognized through Social Security, why is it so important?
Well, you need your birth date and birth certificate in order for you to apply for it. Plus, also, the employer needs to know whether or not he's hiring somebody that's underage.
That is correct. All right. You need to determine if this person is valid of age, right? Because there are restrictions for anybody who's underage, right? They can only work so many hours, right? So again, that's going to be in through the Labor Act laws, right? Anybody
Right.
under the age of 18 needs to have some kind of parental signature, or I think that, I'm sorry, 16, you need that parental signature of how many hours you can work. 18, I believe you can work full time, but there are also some restrictions, and of course anybody over 18 can feel free to work as much as they want. Okay, so yes, there's an age requirement, so that is exactly why you need to have a age here to determine whether you're hiring somebody of age who can work and what are those work restrictions. Okay, and of course you're not obligated to enter in a gender. Okay, and there you go. So there you go. I filled in my very first employee's information. There are 2 more that you have to do here, okay, to add in an employee. So let's see. Yeah, let's have time for one more employee. So let's go ahead and do Katie Ropa. So as we know, Katie Ropa is one of our sales representatives. So here, right here in white, it's not green anymore, but it's still top right, you're going to go ahead and click on add employee. Okay. And it says we need to pay employees. Okay. Not right now. So let's see, what is her name? Her name is Katie Ropa. Okay. All right. Now, what's so important about an employee's display name versus an employee's legal name to be printed on a paper? Printed on a check. Now, remember, if your employee chooses to go by a nickname, maybe Katie doesn't go by Katie, it's just K, right? You can go ahead and put that as a display name. But it's very important that you understand that the name to be printed on the check has to be their legal name, right? It has to be the legal name that they sign up with the bank in, because the bank can have an issue of processing a paycheck, right? If it's not the legal name, so in this case, if Katie is their English name and she has a foreign name that she uses, she has to use the foreign name because that's going to be her legitimate name. So again, you would find that on the social security card and or state identification card, okay? Whatever it is, you have to put the actual legal name there, okay? So make sure you know the difference between a display name. So the display name, you can have, again, a nickname, or you can you can have a nickname there, but the most important thing is the legal name has to be right here under the name printed on the check. Okay. Next we have here is she lives on 2501 Golden Rain Road, apartment number 11. Okay, so here she lives on 2501 Golden Rain Road, apartment number 11. Oops, 11. Okay. City is Walnut Creek, California, 94. Okay. Walnut Creek. State, California. Zip code 94595. United States. Okay. What are her tax information? Okay. Her tax information is she is filing single. She gets commissions and bonuses. Hers is going to be 50-50 between the company and the insurance is 50-50. So she's going to pay $150. And she's going to put in 401k 4%, and the company's going to match her, or 5%, and the company's going to match her 3%. How nice. Okay, so in this case, 401k, so single, commissions, and bonus, 50-50. So W4 marital status, single, okay. She gets commissions and bonuses, and then health insurance is going to be 50/50, which she pays 150, and then 401k, she puts in 5%, company match 3%. Right? So again, if you went through the process of the subscription, right, all of this information, you actually plug it into the system, so then the system can recognize that immediately and pull the appropriate tables that are necessary and be able to file, right, and process. All right, so and then right here, employees information, okay. So we have her social security as 503281026. 50328. Okay, 503281026. Hire date. Let's see, we hired Katie on November 2020. Okay, she gets $17 an hour, and she was born April 20th, 2001. So she is a baby. Okay. All right, hire date we said was 11/20/2020. Okay, so again, if you want to click that date, so you can type in if you'd like. Okay, or was it, hold on, I think it was November 1st. Yeah, November 1st, my bad. November 1st. Okay. She's still working with us. Okay. She cost us $17 an hour. Okay. Birthday is. Okay. She was born April 20th of 2001. So barely 21. Okay. And let's see. And we're going to go ahead and do preference not to answer. Okay. And save. So now we got 2 employees in here. All right. So for homework, you guys are going to be responsible to plug in the last person here, which is going to be Mario Mobila. All right, so go ahead and plug that in for homework, okay? And when we come back, we'll go ahead and set up our payroll tax setup, okay? So we're going to take a break right now, okay?